Hey everybody, I hope everyone is doing well and had a good day. In this video, I'll do a brief review of the Emini 5-minute chart for Thursday, May 22nd, 2025. And I want to start by talking about the pattern at the close of the prior day going into today, and that was a bear channel. The market was creating lower lows and lower highs, and you can draw a trend line by connecting these highs and draw a parallel line connecting the lows. And based on Al's teachings, and you can do this a number of different ways, but I prefer overshoots in the second leg here rather than undershoots in the third leg. So that's why my trend line is connected here, and you can see the second push overshot the channel line rather than connecting this down to these lows so that the first and third push would be undershoots. Now, if we think about the context going into the day, we have 3 legs down in a bear channel, and right away this gets into beliefs about price action and trading in the market and the forces that really control price. And that is, I have a belief that wedges correct most of the time. So when we get 3 push patterns, I expect what Al says, 10 bars and 2 legs, sideways to up. And that 10 bar 2 leg rule is really a guideline, and it depends on the size of the wedge that it's correcting. So if the wedge is lasting 30 or 40 bars, the correction might be 20 or more bars. So context going into the day, here's the open of the day, this vertical blue line. So the first bar of the day is this bear reversal bar. And it was immediately followed by a bull bar. So down, up on the first 2 bars of the day, and that's foreshadowing trading range behavior. Now we see that it's 3 legs down in a channel. And because of that, I'm wondering if the bear breakout of the channel line down here is going to fail, and if we're going to go and test the trend line. And sure enough, that's what we did here. So 1, 2, 3 pushes down, bull reversal, a pause, a second push up, and then I call this a third push up, but it's different. The character of it, it's different than this breakout, pause, breakout. We didn't really get a pause and another explosive bull breakout, but instead we got shrinking bull bodies. And that's a sign of bulls losing momentum. So big bull bar, big body, smaller, even smaller. If we look at a 1-minute chart, I assume this is a classic spike in channel bull trend, and the channel probably has 2 or 3 legs up of its own. If we think about where the market is testing at this point, there's a couple of different ways you can look at it, but what's important to realize is in this area, you look to the left, we're testing resistance. We have a prior swing high here, so we're breaking out above this high, but we still have resistance from over here. And you might draw, maybe it's an expanding triangle, lower lows, higher highs. But either way, this is a resistance area. It's a sell zone. So when the market is losing momentum and it's in a sell zone, let me back up and rephrase that. If you're buying and you're buying in a sell zone, you're buying at resistance, your premise is that you're buying because there is momentum, because you're not a value buyer. If you're a value buyer, you're buying at a fair price or below fair price. You're buying down here at support. But if you're buying above the average price and above bars to the left, you're a momentum trader. You're betting on a trend. And you have to be able to read the hints bar by bar and see that the market is losing momentum as it's approaching and breaking out of resistance. And that's a bad sign for the bulls. And by that I mean the bulls buying, betting on momentum, are not getting the momentum that they need. So the bulls will bail out and look to buy lower. Now the bears are selling value. We have 2 or 3 legs up. We're testing resistance, like I said. And again, we're losing momentum. So we got a strong bear breakout here. Top of a channel, 2 or 3 pushes up, losing momentum here. And also a bad buy signal bar. This was a doji, broke out above it. Traders trapped above. But this looks like a trading range or a broad channel. And if that's the case, gaps tend to close and traders are forgiven. Meaning if you sold here, scaled in higher, you're probably going to make money. So bear breakout, pause, another bear breakout, big, small, big, simply a bear breakout on a higher time frame, so you would not see the pause on a higher time frame. Second leg down, likely. In this case, it's basically a spike and channel bear trend. Spike, pullback, channel, leg 2, pullback, leg 3. So 3 pushes down, and we're testing support. We're testing this bull trend line, which is a parallel of the channel line up here. We stayed above this prior low, and that's a sign of strength by the bulls. It's not random that we paused just above this low, and it's a different story if we poked below the low. What happened here is the bulls who bought and put a stop below bar 2 defended their stops. So again, that's a sign of strength by the bulls. 3 legs down, bottom of a channel, reversal up. The bulls are probably going to get a second leg up. And you have to wonder, is this breakout from back here going to get a second leg up? And sure enough, it looks like we got a leg 1 pullback, leg 2 measured move. Here, you could say the market cycle reset, and this is a leg 1 bull breakout. But look where the market is forcing you to buy at this point. And this structurally is similar to this 3-bar spike and channel. 3-bar spike and channel. On a smaller time frame, it's more obviously a spike and channel. You expect the channel to evolve into a trading range, so the market will probably test below these bull bars at a minimum, but still a second leg up is likely. The bears need at least a double top to sell. The bulls still might get a second leg from back here, and the bears already had 3 legs down to support, and you can call it 1, 2, 3 legs here, maybe a head and shoulders bottom. So leg 1 for the bulls here, but traders, rather than buying at resistance where traders got trapped on the bear breakout, they may look to buy a pullback instead. Now is this leg 2? The way I see it, this is a bull breakout, pullback, 1 trend resumption attempt, but a failure, and then a second trend resumption attempt that ended up succeeding. So for me, this is a high 1. This is not a second leg. This is part of the correction. The bulls did not get a strong breakout to a new high. You can even argue they didn't get it here until over here. So I'll go back over that. Bull breakout, high 1, high 2, and then breakout above these highs, but still no strong close at a new high until here. I'm not even sure if the bulls got above a close above this bar before the pullback. But the way I see this is leg 1, complex 2-legged pullback, leg 2, pullback, leg 3. And you might notice a pattern on this chart. Every yellow box is a climax testing support or resistance, and followed by a strong reversal. So here, biclimax, testing resistance, strong reversal down. And they're also late legs. I don't know if I mentioned that. They're either late legs and or biclimaxes or subclimaxes. So here, 1, 2, 3 legs down, strong reversal up. 1, 2, 3 legs up, testing resistance, strong 4-bar micro channel. And then here, less obvious because to me it looks like this was a micro channel all the way down. And that's why counting implied pullbacks is important. What we're counting is pauses in momentum. So leg 1, pause, leg 2, pause, leg 3. It's all one simple leg, but with 3 pushes. So 3 pushes down. The third push is again that spike and channel structure in 3 bars. If we looked at a 1-minute chart, bear spike, pull back, channel for another couple of legs, trend line break, retest, reversal. So another late leg testing support, strong reversal up, another spike and channel to the upside. We'll also notice that traders selling prior highs are making money. If you sold here, you made money. If you sold this high, you made money. If you sell this high, you're probably going to make money. Bulls never got a clear breakout to a new high. But failed to close above, and then lots of overlap. Same thing here. Not getting a clear breakout to a new high, deep pullback, and then again, another third leg up. 1, 2, 3, and a fourth leg here, but testing resistance, and then a strong reversal back down, just like here and here. And then 2 legs down, 1 pullback, 2, saw climax testing support. What's different here is that when we think about the big picture context and what happened yesterday and what's happening today, I wonder if the bear breakout from yesterday is going to get a symmetrical second leg. And I'll show that on the 15-minute chart here. So here's the 15-minute chart. This was yesterday. And I apologize for yesterday. I made a video and I just can't upload it for some reason. I still can't upload it. But I was talking about the fact that we had a bull channel, strong bear breakout, spike and channel. And then today, we continued going sideways. The channel evolved into a trading range, but there's resistance here. And I'm wondering if the breakout at the end of today is the start of a second leg down. 1, 2, and maybe we'll get a measured move down based on the height of the trading range. Those are my thoughts for today. And just to close up, today was a broad bull channel, so the market continuously created higher highs and higher lows, but there were swings to the downside where stop order bears definitely could have made money, and there were instances where the market was always in short. So bull trend, yes, because it's higher highs and higher lows, but you trade it like a trading range that's sloped, a broad channel, a broad bull channel. You still trade it like a trading range. So you look to buy low and sell high. All right, that's going to be it for today's video. Thanks everybody for watching, and I hope everyone has a good night.